Hi everyone, it is Sunday the 3rd of May 2020 and I'm just having a look at the global indices, starting off with Wall Street, the Dow. And so first of all, I just want to reiterate there is technically no trend on the monthly. It is worthwhile, it's interesting to have a look at a different time frame. If we go to quarterly, we can see we've broken this previous low. Overall, we're still looking relatively nice and bullish. If we go up to say an annual time frame, we've actually had a bit of a rejection of the lows, but none of that is really offering much clarity at the moment. So no clear trend on that monthly and no clear trend on the weekly. Just means that the daily is really the biggest clue at this point in time in terms of trend-like behavior, but then looking at price action. So the most significant thing from the previous week is we had previously we had a couple of bullish candles, which are also referred to as hanging men. They can often occur at the top of a turning period, also near a significant number, 24,000, and we had a very strong rejection candle of this previous level of support and resistance. So this, in isolation, is a potential setup for a move lower. Again, what I would need to see is a break below the low of this candlestick, and I want to see a follow through of that. We've actually had breaks again in previous weeks. I need to see a bit of a follow through on that. So lower time frames, I'll be looking for possible breaks and retests on say the 1 hour time frame, but looking for that trend to head lower. What I do notice about the daily here is that although we've had a really nice uptrend and we are at some significant resistance, what I have noticed is that the highs are there's a curve to it. So it's kind of slowing down in terms of the angle of the highs and starting to look weaker or more exhausted. Now, the key thing here really is that we're still in an uptrend. Technically, we haven't broken the low here. So in other words, it's still possible that Monday could produce a bullish candle and then we are building to a breakout of this level and heading higher. So this is why, although the bearish candle set up on the weekly, I'm not going to be increasingly bearish until we break this daily uptrend. That's effectively what I'm looking for. So a nice break below 23,000. Doesn't mean that if the 4 hourly, which does look quite bearish at the moment, if I just go down and show you the 4 hourly, still looks relatively bearish. It doesn't look, it's lost its uptrend that we had on the 4 hourly. But again, I'm looking for that. There is a very real possibility that the daily can recover straight up on Monday and then head higher. So stuck between a bearish signal at a key level and a weakening sort of series of highs on the daily, but really I'm not going to shift until this daily uptrend is broken. Okay, so not going to immediately start to become bearish until I see a confirmation or confirmed change in trend. Having a look at the Nasdaq, which is generally speaking the most bullish of the bunch, also those highs are starting to curve a little bit, change a little bit. Also a bearish rejection of 9,000, okay, significant level. No clear trend as such on the monthly, but the Nasdaq is the strongest. And also, this is very interesting. I think at this point I'm going to go through and just show you this. It's quite interesting. So this is an index on the US FANGs. So this is for those of you who are not familiar with this is the 5 biggest contributors to the Nasdaq, which is Facebook, Amazon, Netflix, Google, which is also Alphabet, and then of course we've got Apple. So those are the biggest contributors. And so if we look at them, we can see there's also a strong rejection of 3,500 and a bearish candle. Okay, but these are the biggest ones. And generally, Amazon itself can actually create a big move. And so they skew the Nasdaq. And so this is just something to keep in mind, is that that's being skewed like that is not necessarily indicative of the underlying economy, and therefore we just have to be aware we're not necessarily getting the whole picture just from one single index. Having a look at the S&P 500, also a strong rejection candle, a couple of hanging men there. All of these collectively are signs of a bit of exhaustion. We've had a big move up without a retracement. We still have a daily uptrend, but again, I want to see a break of the low of that. So I may do intraday trades to the downside and then potentially pick up on that if we break the low of this. Alternatively, if we recover immediately, in the early hours of Monday morning, it's likely we'll see through the US session, we'll get some clarity on this. Again, no clear trend there. So this is how I'm prepared to trade out both of these potential opportunities going through to the Russell 2000. That's actually looking the most bullish of the bunch. It's broken through resistance, coming back to test support. Rejection candle there, absolutely at a key level. So these are the significant items. The weekly is saying not just hanging men as potential turning points, but also rejection candles as well as at a key level. And that's really what is, and they're potentially also at Fibonacci levels as well. So just those are the things that to me are saying that there is a stronger possibility of that reversal, that the market has been trying and trying and trying and has now potentially failed to do that. So we'll see. FTSE 100, not necessarily as a strong, same thing, 6,000 bearish candle, rejection also coming back into a strong level here of support and resistance on the monthly. So these markets outside of the US not necessarily as bullish. And same thing, Euro stocks as well, strong bearish rejection candle. It's actually broken below a key level of support and it's potentially struggling to get back over that. We'll have to see how that goes. So in other words, not seeing the same recovery outside of the US necessarily. Then moving on, let's say Hong Kong, Hang Seng, have a look at that. Very bearish candle, strong rejection of that, strong rejection of previous support so far. So again, I'll be keeping an eye on these trends, looking to see them head lower. Japan, same thing, the Nikkei, same thing, similar thing, and then finishing off with the ASX, the Australian one as well. Nice bearish rejection, all of them rejecting support resistance levels, producing almost similar results across the board. And so that could potentially turn out in under ordinary circumstances. I would say yes, that's absolutely significant, likely to see it head lower. But in the last year, I've seen lots of very bearish setups across the board that have been immediately negated, and so I'm not really going to do that. I need to see more evidence this time on the daily. I want to see that follow through. All I can comment on is quite a few of these daily charts do appear to be losing their enthusiasm, and that could be an additional clue here. So again, for me, the clue will be when we break the daily support, the recent swing lows on the dailies, and then starting to head lower. So I'll be very cautious on my intraday trading. If on the other hand we start to head back up towards key levels, then I'll make sure that I'm entering on a bullish with a more of a bullish approach.